In the first quarter of 2025, the U.S. economy experienced a contraction of 0.3%, marking the first decline since early 2022. This downturn was primarily driven by a significant surge in imports, as businesses rushed to stockpile goods ahead of President Donald Trump's newly imposed tariffs. This preemptive import activity led to a record 5 percentage point deduction from GDP. Simultaneously, consumer and government spending slowed, with households cutting back on large purchases, raising concerns about an impending recession. Inflation also presented challenges. The Core Personal Consumption Expenditures (PCE) index, which excludes volatile food and energy prices, rose by 3.5% in the first quarter, surpassing estimates in the previous quarter's 2.6%. Although March showed a slight cooling, economists warn that the full impact of the tariffs has yet to materialize, potentially pushing inflation higher in the coming month. Federal Reserve Chair Jerome Powell acknowledged the challenging scenario, stating that the central bank might find its dual mandate goals of maintaining price stability and maximizing employment in tension. The Fed has paused further interest rate cuts, awaiting clearer economic outcomes amidst ongoing trade policy uncertainty. The Washington Post President Trump, however, dismissed concerns about the economic contraction, attributing it to previous leadership and asserting that the economy will rebound due to domestic reinvestment and the effects of the tariffs. He continues to pressure the Federal Reserve to lower interest rates, criticizing Powell's performance publicly. The Washington Post financial markets responded negatively to the economic data, with major stock indexes experiencing sharp declines. The Dow Jones, S&P 500, and NASDAQ initially plunged before partially recovering later in the day. Private payroll growth also fell short of expectations, with only 62,000 jobs added in April, marking the weakest month since July. Economists warn that the combination of weak growth, persistent inflation, and labor market slowdown has heightened concerns about the U.S. economy's trajectory. The surge in imports ahead of the tariffs, coupled with reduced consumer spending and government expenditure, paints a concerning picture for the months ahead. As the full effects of the tariffs unfold, the Federal Reserve and policymakers face tough decisions to navigate the economy through these